Hey everyone, and welcome. Today, we're diving into some pretty shocking new numbers from the US budget. And honestly, they point to a financial emergency that could have a real impact on all of us. So let's break it all down.
Okay, let's just start with this one giant number, $284.4 billion. Just let that sink in for a second. It's one of those figures that's so massive, it's kind of hard to even wrap your head around it. But it is right at the heart of the story today.
So what is it? Well, that was the US budget deficit for the single month of October. And this isn't just a big number, it's a new all-time record. We're talking even higher than the deficits we saw at the absolute peak of the pandemic. So the big question is, how on earth did we get here? So yeah, how did we hit a record-breaking number like that? Well, when you boil it all down, it's a really simple, but also a really shocking story of money in versus money out. And wow, the sheer scale of this gap is just startling. The government brought in about $404 billion in revenue, but it spent a colossal $688.7 billion. To put that in perspective for you, that's an overspend of more than $22 billion every single day in October. You know, there's that classic old saying for a situation just like this, and man, it feels more on the nose than ever. The spending is just out of control, and the consequences are really starting to pile up in a super dangerous way. And here is one of the biggest, most dangerous consequences of all that spending. Over just the last 12 months, the U.S. has paid $1.24 trillion on its national debt. And let me be perfectly clear, that's not paying down the debt. Nope, that is just the interest payment. So what does that actually mean for you, for your tax dollars? Well, here it is. For every single dollar you pay in taxes, 24 cents of it doesn't go to building roads or funding schools or national defense. It just goes straight out the door to pay interest on money we've already borrowed. Nearly a quarter of all government revenue is now being eaten up by this one single expense. Now, this kind of financial instability, it always makes investors super nervous, right? It forces them to look for somewhere safe to put their money. So how are they reacting? Well, let's start by looking at the wild world of cryptocurrency, where a really high-stakes moment is coming up fast. A massive, and I mean massive, $14 billion worth of Bitcoin options are about to expire, and traders are getting pretty antsy. This is the kind of event that could trigger some huge price swings. But which way is the smart money actually betted? This table kind of breaks it all down for us. So call options, those are basically bets that Bitcoin's price is going to go up. And as you can see, there's over $9 billion in those bets. But here's the kicker. Because of Bitcoin's recent price drop, 84% of those optimistic bets are now out of the money, which is just a fancy way of saying they're pretty much worthless. Meanwhile, put options, bets the price will fall, are looking much, much better. It suggests that right now, pessimism is the more profitable play. So when you put it all together, the data is really pointing towards a bearish or pessimistic outcome being highly likely. The bulls, the optimists who were betting on a price surge, they got caught completely off guard. For Bitcoin to rally, it just needs a fresh wave of cash to come into the system. And that money, well, it just isn't showing up right now. Okay, so if crypto is facing these kinds of headwinds, where else are investors looking for safety? It's probably not going to surprise you that many are turning back to a much more traditional safe haven asset, gold. This slide really highlights the key difference between these two. Analysts see gold as a direct shield against exactly what we're talking about, out-of-control government spending and a devaluing currency. Bitcoin, on the other hand, is seen as being way more dependent on the amount of easy money or liquidity that's just sloshing around the financial system. And for that reason, their paths might keep splitting apart. And hey, just a quick refresher for everyone, what exactly is a hedge? Basically, think of it like insurance for your investments. It's something you buy to protect yourself in case your other investments go down. In this situation, investors are trying to shield themselves from a declining US dollar. And all of that brings us to this one simple conclusion from the market analysis. When you're in times of fiscal crisis and currency trouble, gold has a long, long history of being the ultimate way to preserve your wealth. All right, let's bring all these pieces together and look at the stark reality of the bigger picture. Because what we're seeing here isn't just a bad month, it's a truly terrifying trend. Looking back, there was this brief little moment of hope for some fiscal discipline earlier this year, but that hope has been, completely wiped out. This record-breaking October deficit puts the United States right back on a path toward what analysts are now calling a debt shock. That's a sudden crisis where the cost of borrowing money just spirals totally out of control.
Look, the source material on this is blunt. There's really no sugarcoating it. This isn't being framed as some temporary dip or a normal downturn. The conclusion that's being drawn is that the financial situation in the United States has never, ever been worse in its entire history. The gap between what's coming in and what's going out is getting wider, and the crisis is picking up speed. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.